Hey everybody, this is your weekly review for the week of February 7th to the 18th for the Forex day trading strategies. Pretty good week out there. And let's start with February 7th. There was just a pretty much solid sell-off. And then we get this pretty nice reversal here, taking out some highs. And we get a nice double pump. And there'd be not too much you'd be looking for in terms of anything else. Maybe because this peaked above here and the drop down, you could be looking at a potential rounded top. But then, of course, you would need the rally up and then a drop. So the double pump came up first in this case, and it fits in that what we want. It fits pretty much in a triangle, and that's what we had. So nice pop after that. Then we had another one here, but this one would have been a bit more... what's the word? A little bit more, I don't know, an aggressive trade, I guess, in the sense that we did spike out of there quite a bit. So you actually might have been looking for a possible reversal with the little pullback and potentially move up. That move up never came. It just fell off. But yeah, just a possible one there, or the possible rounded bottom, which never materialized. We did get a rounded bottom here, this little one. We also kind of have this bigger pattern, so an interesting one. You definitely could have left this totally alone, or you could have taken it. It was, kind of an interesting dynamic, because depending on which way you looked at it, if you looked at just this tiny one, the price breaks out, and it's definitely a bit extended outside the pattern at this point, but it was also very small, so we might allow that a little bit. And nice trigger candle there. Or if you were looking at more of this bigger pattern, this was quite a bit of acceleration here, but we had that pause and then just a tiny drop. So that was nice to see. We did get a nice shift here. So taking one here or possibly even over here would have been okay based on that bigger pattern. Bigger patterns, as I've talked about, a little bit harder to trade to pinpoint the entry down. But yeah, that was a very interesting situation there. This one tripped up some people, the 8th, and just watching for the right kind of patterns. And we know that there's certain things that tip us off to generally avoid patterns. And this is one of them. When we're pretty much chopping sideways and you have a really hard sell-off. We accelerated into that bottom and we were very slow to recover. Is that, with the rounded bottom, we're looking for that shift higher, a strong move, the selling slowing down, and we have a strong shift up. This is almost the opposite of what we're looking for when we have a strong shift or a really strong sell-off followed by a very weak rally. That is not what we're looking for. So this one could have been pretty easily avoided simply based on that it's not really what we're looking for. And little rounded bottom here. And this one was a good one to take. But then I also made a note here that, because we can just see it's starting to level off, we get this pop up, a little pullback, stays above the lows. Nice tiny trigger candle there. But I did point out, look at how the price is coiling up. You can see now that we are basically just getting compressed above this prior high. We've been in this area for quite some time now. And when that happens, so I do have a strategy called a squeeze play. It doesn't happen very often, but it's basically this. When we start to see, a higher swing lows pushing into prior highs, and then you get the consolidation like this. Now, in my mind, if this is getting squeezed up and the bears are going to get scared and the bulls are going to get giddy, this should pop higher, right? The price is getting compressed up there. So if it's going to go, I would expect it to go up. If it doesn't, move your stop loss there. So this was one where, even if you didn't know about the squeeze play, just kind of thinking through the process here of we're really moving sideways here, and not a lot of movement in like the last hour, 10 pips. Maybe control the risk a bit. So this was one where you basically could have got break even or a tiny profit. The rounded top I did not like, basically because you have the high here, the pullback. This is your low point that you're waiting for the drop below. So we have the high point. When it drops, it doesn't get below there, gets up there, kind of fizzles out like we talked about. Doesn't make a lower low there, but we're just in that variation pattern, and by this point we can just see we are rocking sideways, and overall 10 pips of movement in the last more than an hour. So a little bit leery to take that one. And I was looking, some people noticed, actually quite a few people noticed this little rounded bottom here with this very strong shift up. Like this is a different kind of move compared to what we've seen in the last hour or so. This is a very nice, strong, confident up move, which I like to see. Beautiful tiny trigger candle, and off to the races there. So I was looking more of this bigger pattern that we'd come in here, dropped off, and we've really had time to kind of fizzle out. We just had a little false breakout to the downside here, and then we get this shift up. So I was looking at it more like this, but this tiny little pattern here was a fantastic one where you can just see the rounding off and then this nice shift up. Big DP, probably not something I would have been interested in trading. You also had the possibility of a rounded bottom there, right? The drop, the move up, the drop, the move right back to the high, and could have been looking for a possible trigger in here to go long. If that was the trade you had taken, that would have been okay as well. Pretty low movement, 12.5 pips in the last 2 hours coming into this day. There was a pretty nice rounded bottom here. It's just whether you wanted to take that in the low movement, it would have been profitable, but a lot of days those are not going to work out, so you're going to have to look over your charts and see if taking some of those works better for you, or if you're better off just leaving them alone. And weird rounded top, but decent context. We had just kind of broken above the day high, just a tiny bit, maybe about a pip or so. And then we had this sell-off. This was also a very quick little pullback though, so it would have been tough to get a trigger in there, especially if you're kind of humming hawing at all over this. It would have blown right by you. So totally okay to skip that one as well. And again, there's too much acceleration. So I want to talk about acceleration, and there's a couple examples on the next couple charts as well. When I say it accelerates into the bottom on a rounded bottom, or accelerates into the high on a rounded top, that does not mean the pattern will necessarily fail or that the price won't eventually go higher. But what happens is that when you accelerate, let's use this as the example. You have some strong sellers in here. You have people who are afraid to own. So when you get acceleration, it just means that it's going to be tougher for it to turn very quickly. And our rounded bottoms turn quickly. So this one, you can see sellers pretty much exhausted. They don't really have much. They can barely get below this swing low. And then you have this nice strong shift. Buyers moving back into control. Pause out, move up. So this one shifts very quickly. The buyers got back into control. We have a little pullback, and then the bulls, the buyers, take back over. It happens very quickly. When you have acceleration, this tends to not happen as quickly. You generally get much more chop before the move, and it could be up or down. We don't know. We're going to wait for another pattern, because with the acceleration, I'm usually not going to trade it. And so we have this strong move, so it just automatically tells us we're not looking at a rounded bottom here, even if it were potentially to set up. Because even if this were to rally above that high, it's more likely to chop around as opposed to just do a little pullback and then a surge higher. That's just not quite as likely. Where when we have the slowing, that's more likely to happen. So just a note of why I talk about acceleration into the highs and lows, and why I definitely don't like or prefer not to trade them. There will be certain contexts I'll trade them if a lot of other things are looking good, but yeah, for the most part, leave them alone. into the drop. A little bit of a lower low there, and waiting for the move back up. No trigger. If you were looking at this one, pretty big stop loss. To me, this is like the move already happened. Like this is the move we want to be in for if the pattern had occurred a little bit earlier. So it'd have been nice if the pattern, popped up here, pulled back, and then we had this big move. By the time this move happens, it's like, is it going to pull back and do it again? Maybe, but to me this looks like what we were waiting for already happened. And another example, we have a little drop, pretty hard sell-off. This sell-off is bigger than this one, so sellers still there. And even though they're counteracted by the buyers, when we get that acceleration, you just tend to get more chop. You don't get the pullback and the run as often. You generally get the pullback and then more chop, kind of like what happened here. This was a really big day for some of you. Would have required that potentially doubling or tripling your stop losses even from what you're used to. That means dropping your position size in half or to a third of what you're used to. So there's a lot of changes that go on. And there's no issues when a day comes up that you just have not experienced. And we've had a couple of these big days in the last month or so, a couple months. So hopefully they're starting to become a little bit more familiar, but there's newer people taking the course. If you come across a day like this and it's just so different than anything you've experienced before, there is no problem just sitting and watching and maybe just kind of paper trading it where you punch in what your stop losses would be so that you just know, okay, on a day like this, maybe my stop loss is 5 pips. That's okay because there's so much movement. I'm used to only trading 2 pip stop losses or 2.5. But 5 or 6 pips seems to be okay because of how much the price is running. Punch in your position size so that you get used to it. Nothing wrong with that at all. I saw some pretty big numbers from some traders who saw the big movement and decided to implement trailing stop losses, and it was a good day to do it. Yeah, even earlier on, before there were some trades, you can see like just an aggressive stop loss trailed behind each low on any of these moves or on the way down. Would have given you a pretty good chunk of the entire move. So we just have strong movements going both directions. And here is the first really nice one. And this was a variation pattern. We run into the low, pop up, a little bit of a tail here, a little bit of acceleration, and then we chop around for a little bit. So this is what makes it a variation. But then notice how we still get the strong shift up. That's what I want. If it chops around a little bit, that's okay. Does the price move up and clear that high with some authority? That's what I'm looking for. And it does. It clears above that high on a pretty, not vertical move, but a nice, steady, strong buying. We have a little pullback here. Nice. You could have got in right there. If you held off just a little bit, you would have missed that entry, and then we have an even nicer trigger candle here, and that one would have worked out well too. So if you took this one, you ended up with about a 2.5 reward to risk, and you got out up here. If you got this one, then you had the potential to make much more, and if you trailed it, you would have been over the 2.5 to 1. And this one was another really nice one. I like this one. Clean entry, not a variation pattern. We have the drop, the pop, the drop. A little bit, it did make a little bit more of a lower low, but these were about the same in length. A little bit less. You can see this drop runs from here to here. That's about 10 pips. And this one runs from about there to just not quite to the bottom of that line. So you're looking at about 9 pips or so. So pretty close, but it definitely wasn't acceleration compared to this. These moves were about the same size. Nice strong shift up. Nice little hammer candle there. And entry here. I pointed out the magnet area because typically magnet areas are going to be the highs or lows of the London session, and when those get taken out during the US session, because the price hasn't been back there for a while, so there's stop losses above it. But look at how much price action took place below this high. We have a huge drop, and these are big moves, lots of people getting involved, lots of buying and selling, and it's 6:30, 6:40, and we're about 8 o'clock. It's about an hour and a half, hour and 20 minutes before we get back there. And if we clear this, think about how many people might have stop losses above this high, or this high. Quite a few. So if we start clearing that level, it doesn't mean the price is going to surge, but it means you usually get that pop through, and then you can judge it from there. If it keeps running, use a trailing stop loss. If it kind of fizzles out, that's okay. You were expecting that pop above. It didn't work out. If it starts to turn back down, assuming you got a decent profit, just take your profit. In this case, we had a very strong run. So this entry here, you had the option to hold it. Also, some other people just looked more at this as a trade where we have a nice consolidation. If the price breaks higher out of that consolidation, you are very close to this high, which is going to clear those stop losses. Anyone who's short is going to have to buy, which is likely going to cause enough of a pop to get you above here and here. And that's exactly what happened. It just started clearing out stop losses and did not stop. Aggressive trailing stop loss, whether you were here or here. And this target was right near this high. So it would have been pretty easy to, once this started breaking up, to move your target up at least a little bit to capture some of that pop. And then as it kept running, you could have just canceled the target altogether and used an aggressive trailing stop loss. So that would have gone stop loss here, 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 and you're out right there. And that would have been depending on your exact entry, 8, 9, 10R. Not that you have to do that, but even if you got 2.5 there and 2.5 there, still a 5R day. Friday the 11th, very strong sell-off into the low here, and I also pointed out this is not a rounded top. Unless a rounded top looks like a mountain top where you have one peak followed by a higher peak followed by a lower peak, that's not a rounded top. So this just kind of shoots up and then pulls back. So we get a little shift down here, but we don't really have the kind of mountain formation of the rounded top. More like just a little V pattern or a upside down V. And then notice this. If you're looking at also this as a rounded bottom, yes, drop in. Can't make progress. That's good. But then just this slow drag up to the highs here. So do we want to get into that? Probably not. I don't want to. Nice little rounded top here. And we have a little bit of extra evidence because if the price... I'm getting ahead of myself. Okay, we have the rounded top. Pull back, move to a new high, can't make any progress. The shift down. We are now back under that little area of resistance. So this could potentially be a false breakout. We don't really know that yet. But we do have our little rounded top. And if the price breaks below that, we have a rounded top and some decent confirmation that our move higher was false. It was just a false breakout to the upside. The buyers aren't there yet, and we're selling off. So that was a pretty nice one, and then we had another very clean one right here. Drop, drop. This is a big red bar, but you can see it does not make much progress below that prior low. So we have that shape that we're looking for. And gets up here, and this was a little bit extended, but I just thought this was a really nice near vertical move, and so definitely good. It could have also potentially taken it right in there, but it would have been tough to get your order out quick enough, because we didn't really have a pullback after we reached that high. So this was the entry that I thought looked good, and then we just get this whipsaw action. I also pointed out we had the Fed Economic Committee report, or whatever it's called, that's only released twice a year, so it's not something we see very often. It's kind of like when the Fed chairman has to testify or something. It's something that's potentially drawn out. So I didn't look at what happened after this, and I will, just so I can make some notes for myself, and I can go back through my old charts and see if it affected anything. But this could be one of those ones where nothing happens when the report's released, because I don't know how long it is. People have to process it. The chairman's also testifying, talking. So something might come up in that speech that all of a sudden causes a crazy move. And so it's just one of those things to be aware of. If you don't really know how this works, or how long it's going to last, or if it's going to cause some crazy moves, then just call it. I had to quit anyway. I was going to the gym, but just something to be aware of when you see reports or chairmen that are giving a speech to Congress or something like that, because they could say something that spooks the market, and all of a sudden you have a 30-40 pip move in 1 second, and it blows through your stop loss or something. So just be aware of that kind of risk and decide if you want to step away or not. So that is the week in review. I also, before I leave, I had mentioned in a little Twitter video I made for someone that on your chart, or on in like a little trading journal on the side of your computer or something, write down whether you are making strategy mistakes or psychology mistakes, because you could be spending all your time on the wrong problem. So a strategy mistake is when you're not really seeing the pattern. You think you know what a rounded top is, but then you watch this video and you're like, oh, I did not think those were rounded tops, and I traded these other things. That's a strategy mistake. It means you're missing the patterns. If you are, fumbling to get your position size while trading, that's more of a strategy issue. It's just you have to kind of streamline your process. A psychology mistake is when you shouldn't trade a pattern, or you see a very weak rounded top or rounded bottom like this, and you decide, I'm going to trade it anyway. That's a psychology issue. So we don't want to confuse those two. It makes no sense to just keep plowing on charts if all your mistakes are psychological. You know that you shouldn't do something, but you do it anyway. And there is an article I just put up on that, on Trade That Swing, Tactics for Improving Self-Control and Disciplines. Those are psychological exercises to help prevent us from doing things that we know we shouldn't, or also if we're scared to trade, there's a trade we should take but we don't. Psychological issue. So just hammering away at charts and demo trading probably isn't going to fix that. We need to fix this. So that's on that. Just something to check out. And until next time, happy trading. Have a great weekend, everyone.